All right, welcome back. This is part 2 of generational wealth building information. This is not for financial advice. This is for educational purposes only and for entertainment purposes only. And for the record, let the record show I am not promoting anyone to leave TikTok. And none of this, all of this is images produced by me, for the record. I produced the images. Now, I don't want to hear shit. TikTok got me fucked up. Like I was saying before I was rudely interrupted, if Nike stays below $70 for the rest of this week, we could see $64 before the week is over with. And if it does drop below $64, if it drops below 64, the level before that is 58. Now, the fact that Nike is under $70 a share is beautiful to me. Nike is a staple in the shoe industry, dude. They not going nowhere no time soon. All right, so I traded Nike. I scalped Nike. $70 to $79, $70 to $75, $70 to $76, $70 to $78, up and down, up and down, up and down, up and down, making hundreds of dollars, up hundreds of dollars, down. And it finally broke back below $70. So how long will Nike stable at this level before it'll crawl back up? That is why we pay attention to earnings. I want you to know that earnings season is here. And so Nike is one of those stocks that is about to be on the slab, right? Nike got earnings coming up. Nike's got earnings coming up, a lot of volatility. They wasn't making as much money in the last quarter. I just showed you their financial sheet. And I pay attention to the financial sheet so I can know whether it's time to invest in them or not. All right, so this is not financial advice. This is for educational purposes only. I just want you to see that Nike was trading within a range. It was trading between $70 and $79. For every person listening to this live, if you buy Air Force Ones and you don't own any stock in Nike, something wrong with you. Because why is it cheaper to buy a share of Nike than it is to own a pair of shoes from them? So you can be a part owner of the company, but instead you want to own a pair of shoes? What sense does that make? Can somebody tell me what sense does that make? All right, so now we got Sedge. All right, we got Sedge. I got in this at around $20 because I noticed that it was around 20. I noticed that this was in like a U shape. All right, you got V-shaped recoveries. You got U-shaped recoveries. Excuse me, V-shaped recoveries happen a little bit sharper than this, a sharper incline. The U-shape, you can see, is sort of like a U. I got an $80 price target on Sedge. I predict or speculate Sedge going to $80. This is not financial advice. Sedge owns CNBC. Dino, is that what you're telling me? What up, Dino? I appreciate you for showing up to the live every night, brother. I thank you. I value your insight. Melody, I value your insight as well. I appreciate y'all for showing up to the live like y'all do every night. For all my new followers that's coming in, please hit the follow button. Thank you. Don't miss another live. You also want to tap the screen. You guys help me push this live out to a larger audience before I move on with the rest of the show. But yeah, this is one of my trades coming up right here. I'm already in. I got in at $20 on the buying it outright side, but I'm also swing trading it. Okay. So if I wanted, I'm gonna show you how, if I wanted to swing trade this position on Webull, I am about to give you a demonstration on how it would look. I just want a few more people to come in. I need to see some people hitting that follow button, and I want to see y'all tapping the screen to push the live out. All right, well, y'all know how I get down. It's freebie night. I'm gonna give it all out for free. We teaching everything I talk about in this live stream tonight gonna be free. I ain't charging you for none of the information. You do have to pay attention. You will end up spending time, right? right? But at least that didn't end up with you paying money or spending money. Somebody says, slapped on auto AI band bot. All traders are like modern beggars without the cardboard. Well, what are you trading and why are you here? That's my question to you next, buddy. Well, yeah, I think more so crypto traders are what you just mentioned. I'll say crypto traders are like homeless people. But traders are, how can a trader be a homeless person when they are making your weekly salary in the first 15 minutes of the day, sir? Make it make sense for me, please. All right, like I was saying though, Sedge, I see this going up to $80. I got an $80 price range, a price target on this one. But I know I'm taking profit once it hits 40. I'm taking profit every time it, every time it break one of those, because I bought 100 shares at $20, and then I also bought 4 contracts for it to expire far out. I bought a leap. Okay, what I want you to notice is when you buy, whenever I would press trade, you would see 2 buttons at the bottom of the screen when you trade it on Webull. You'll see trade, and then it will be options next to it. You're going to click on options. Still background noise. Dino, can you hear me? Audio is bad? What? Okay. Is it good now? Okay, sorry you guys. Apologize. All right. Yeah, where was I at? I would take profit. I buy more than one contract whenever I'm trading stock options so that I can take profit. If you get one contract, you can only take profit one time. You can only press sell one time if you have one contract. What is a contract, ladies and gentlemen? One contract equals 100 shares. How much would 100 shares of Sedge be? Let's see if y'all good at math. How much, if you wanted to buy 100 shares of this stock and it's trading at $37 a share, how much would 100 shares cost you? I'll give you a clue. 370 is not the answer. That's right, Dino. So look, instead of you spending $3,700, just keep that in mind. I want you guys to keep $3,700 in mind when we talk about how much it would cost to buy 100 shares of Sedge outright. Now, when you trade in stock options, you are saying, I am speculating or I am predicting that the price is going to go to a certain point. It's going to go to a certain price. I think it's going to go from $36 or $37 up to 40. Or I think it's going to go down from $36 down to 20. You are predicting where the price is about to go. Not only that, when you trade in stock options, you are predicting when it is going to go to that price. The price that you are choosing is called the strike price. I hope y'all taking notes. I hope you are listening, because this is the information that they are charging people for. Okay? Maybe I muted that guy for the wrong reason. I don't think he didn't even say nothing wrong, because a lot of days these mentors they're not begging, they robbing people. All right. It costs too much and they not giving out no information. I'm going to show y'all how to trade stock options. I'm going to give you the right terminology, and you are going to be a rock star because you're going to pay attention. All right. So listen closely. First thing you want to determine is where you predict the price to go to. You want to see where the price went to in the past. You want to look up previous levels of support and resistance. You want to learn what is support and resistance and how to find support and resistance. What is support and resistance? Support is the price that the level that the price keeps bouncing off of. It is the floor. If you looked at this chart right now, look at the chart right now and tell me, where is the floor? No, it is not the yellow line that I have marked out. That is a previous level of resistance. And we just broke above that level. I want you to tell me, where's the floor? It's not 15. 15 is between 10 and 20. And if you pay close attention to where 10 is on this chart, and follow the dotted line all the way across, that is the floor. That is the level of support. That is the imaginary level that the price keeps bouncing off of. I call it imaginary because you can't see it, but if you use your third eye, you can. Use your mind's eye and help you see that there's a floor there. There is also a ceiling, okay? The price got down there and it hit that level and it bounced up, but it didn't bounce all the way back up to $100 right away. It didn't go back up to 90, 80, 70, 60, 50, 40, but it did keep hitting that $30 mark. Pay attention. $30 is your level of resistance. $30 is the ceiling. You got the floor, you got the ceiling, you got support, you got resistance, you got supply, you got demand. Somebody says, problem is Orange Guy doesn't like renewable and clean energy. Yeah, I heard something about that. Someone told me to be careful with this stock because he doesn't like solar energy. Okay. But whoop-de-doo, Basil. I still see this stock going back towards 80, but let me continue for the sake of the class. Let me continue. Now, you predict where the price is going to go using historical data. Sometimes the news comes out. Then sometimes you can use indicators. But overall, to know where the price went from, you would pay attention to the candlesticks. Sometimes people use a line graph. There's different types of graphs. I like the candlestick graph. Those lines on the chart, the red and green lines, those are called candlesticks. The red ones show you that the price went down. The green ones show you that the price went up. The red ones, you read them from the top to the bottom. They open at the top, they close at the bottom. The green ones open at the bottom, they close at the top. While I'm yapping, I need y'all tapping. Share the live out to 2 or 3 people that you fuck with. That's your friend, family, maybe even your enemy. They dumb ass need to get it too. All right. So now that we predict, let's say, okay, well, Cedric, I see that the price was $100 in the past, $90 in the past, $80. I see that it fell from 100 all the way to where it's at now. And it looks as if it is done going down and almost as if it's about to make a recovery, right? Like it is about to fully recover and go all the way back up. So I'll predict that it'll go back up. When will it go back up? Well, Cedric, I don't fucking know. Okay, well, if you don't know, then why don't you buy yourself time? Let's look at what that would look like. And remember the price of 100 shares. It's over $3,000 if you wanted 100 shares outright. Not when you're trading stock options. When you are trading stock options, y'all with me? Let me take a moment to let a few more people get in before, because I'm not going to repeat this. Let me let a few more people get in. I'm gonna let y'all I'm gonna take a pause. Let y'all hit the follow button for a second. I'm gonna also share the live out, and while I'm sharing the live out, I want you guys to hit the follow button if you haven't already. Let me get the live out. Do 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 do. All right. That's enough. That should be enough. Okay. Yeah, support. All right. So let me know, what date do you guys think I should pick on this options call? Remember, I think the price of Sedge is going up to about $80. But because I think it's going to $80, I really want to get a strike price that is below $80. Since I predicted going to 80, if it passes the number I picked, then my call will be what they call in the money. And it's self-explanatory when you're in the money. Okay. In the money mean you good. You in the moneyness. You picked the price that it was going to go to, and the price went past that number. You're good. Good. All right. Now, these dates, these folders can be open. Each one is like a folder. You click on it and it opens up a bunch of different strike prices, and you pick what price you think the stock is going to go to. Isn't it fun, ladies? Doesn't it sound like fun, ladies and gentlemen? harder than it has to be. So you think this is, out of your league. So you're not able to, but it's not. It's not complicated. So we're going to pick a strike price that's far out, since we don't know when it's going to happen. You can pick any of these strike prices. I mean, you can pick any of these expiration dates, but the farther out, the better. But the farther out, the more expensive. The closer to today, the less expensive those contracts will be, but the less likely that it is to happen. So you got to pick your poison. You feel me? You think if you open, I'm gonna show you. I'm gonna calm. Let me slow down. Let me show you. I'm gonna show you. I will pick the expiration date far out, way out. Let's go. Let's go January 21st, 2028. Y'all know the year right now. This contract won't expire until 2028. Now, just because it has a 2028 expiration date doesn't mean I have to hold it until 2028. Do you guys understand? Are you with me? Please put a W in the chat if you're picking up what I'm laying down. Because if you are, that means you're learning. If you are understanding what I'm saying, then you are learning how to trade stock options like you never have before. I need the engagement, though. I appreciate y'all for everybody that dropped the W. You're going to win because you're great at following instructions. And if somebody give you instructions on how to do it and you do it, listen, thank me later. I don't want you to thank me now. Thank me later. Don't dare say thank you. Wait till you make the money on and then come back. Double back. Hey, bruh, thank you. I get it a lot. That's what I do it for in my Lucci voice. Now, I picked this expiration date because it's far out. What this does is it buys me time. This buys me time. You want time in the market. You don't want to try to time it. It's not about timing it. It's about time in it. Sedge is at $37 a share. You're predicting it to go to $80 a share. How much time? When will it happen? You don't fucking know. You buy yourself time. There's two different ways you can buy a contract, right? Multiple different ways, but I want to talk about these specific two with specificity. In the money and out of the money. Let's talk about it. Do you see where it says Sedge 37.68 in the middle, in the red bar, in that red rectangle, right? In the red bar, it says 37, right? Now that's the share price. It will always tell you how much the price is right now. Whenever you buying a call, anytime you're buying a call, any of the numbers that are past the strike price. And what I mean by past, I mean it hasn't reached those numbers yet. Right now, Sedge is 37. It ain't $40. It ain't $42. It ain't $43. You're looking for it to go to those numbers, but those are all what they call out of the money. OTM. Remember that term. OTM is out of the money. Whenever a strike price is past the share price, like it hasn't reached it yet, that's out of the money. Whenever the strike price is below the share price and it has already passed it, that's in the money. I hope I didn't just do some dyslexic shit and say that backwards. Yeah. So out of the money means the price hasn't reached there yet. In the money means the price has already passed that. So for $36 is in the money. $35 is in the money. $34 is in the money. And it's so forth. Now, $38 is out of the money. $39 is out of the money. $40 is out of the money because all of those strike prices are above the share price. The share price is $37 right now. You just put a W in the chat if you just learned out of the money and in the money. I want to know if y'all understood what I said. If not, put an L and I'll double back. L stands for listen. L stands for lesson. L stands for learn. It does not stand for loss, because that's what we do with the losses, Gero. We learn from those lessons. We listen and we learn from those lessons. So whenever I say drop an L, it's so I can double back and make sure you get the lesson too. Because listen, when I grew up, they had this program called No Child Left Behind, but they left a whole bunch of little motherfuckers behind. We ain't leaving nobody behind, Tariq. When you are trading stock options, you got two different types. You got in the money and out of the money contracts. All right. When you buying an out of the money contract, it's going to be cheaper because the price hasn't reached it yet. And the farther out of the money you go, the less expensive those contracts will be. And you'll be able to buy more contracts because they're cheaper, but they're less likely to happen. The percentage, the chances of it happening, they get slimmer and slimmer the farther out you go. I mean, you really have to know, and you really don't know, but you really have to know that the price is going to pass that or get to it for you to buy that out of the money contract. You're gambling. Listen, they say 90% of stock options contracts expire worthless. That means people really are out there gambling. They funding these accounts and they just getting on here and they pressing any fucking buttons and they don't know what they doing. A lot of them expire worthless. That means they didn't even sell the contract when it was up. I'm pretty sure they was up at some point in time too, especially depending on what contract you got. Now don't go getting the fucking, you see Sedge at $37 a share, you go and buy the $100 contract that expire in 2 days. That's too far out of the money. Yeah, it was cheap. Sure, it cost you 2 cents, $2 a contract, and you was able to buy a shit ton of contracts, but that's not what you want to do. I just picked look at the expiration date. January 21st, 2028. Look at how much it cost for me to pick the $42.50 expiration date. Hell, even if I got the $40 expiration date. All right, pay attention and listen real quick because y'all know how I am. I'm not going to repeat it. I'm lying. I'm going to repeat it as long as I need to. But just hear me out. All right, so Sedge is $37 a share. But if we wanted 3,000 shares, if we wanted 1,000 shares, we would spend over $3,000 on those. On 100 shares, shit. On 100 shares, you're going to spend over $3,000. But when you're trading stock options, one contract equals 100 shares. Notice where it says next to the number I have circled, last, that's the last price somebody paid for that contract. $16.05 a share. But you have to get 100 shares because one contract is 100 shares. All right. So one contract equals 100 shares. You was going to have to pay $3,786. But instead, you're paying $1,605. And you getting 100. And you get to hold those shares for as long as January 21st, 2028. Do y'all understand? Do you understand? Put a W in the chat if you understand. I've been warned of unlimited losses when it comes to options. Can you explain what that means? Well, they told you about unlimited losses, but they didn't tell you about unlimited gains. Did they tell you about unlimited gains? I will explain in a second. So here I clicked on that strike price and you see, no, they did too. Yes. And this is pretty much self-explanatory. You can make an unlimited amount of money, but you can lose an unlimited amount of money as well, depending on what position you take, sir. All right. 6, get your ass out my class. You got kicked out the class, 6. 6, you got to go. All right. So you pick a strike price that you think the price is about to go to. You pick an expiration date to buy yourself time. You understand? Sorry, you guys, I had to send somebody to the block party. I had to send somebody to where the food is cold and the drinks is hot as hell and burning their top lip. Can you protect yourself from those kind of losses? Also, thank you, my man. You're a legend. Yes, you can. And I'm about to show you how you can protect yourself from those kind of losses. Just pay attention. I hope you hit the follow button too. You know what I'm saying? Don't be having me give away this information and y'all not following me so you don't miss the next live stream. Share the live out to a couple of your buddies that want to know the information as well too. Everybody needs generational wealth building information. Now, You see here it said, you see how it says buy or sell. You guys might be familiar with that if you trade futures, if you trade Forex, or maybe you trade crypto. This is quite different when you're dealing with stock options. Right now, we are buying to enter into a position. If I thought the price was going down in futures, I would press sell. But in stock options, because I think the price is going down, I'm going to buy a put. But since I'm in this case, we're talking about Sedge, SEDG, that's the name of the stock. We're talking about them going up. Okay, so I'm buying a call. You call your friends up, you put the phone down. Are you guys with me? That helps you remember calls up, puts down. I call my friends up, I put the phone down. Quite easy to remember. Now, you have order types. You want to pay attention to your order type. I can't stress this enough. When you are entering into a trade on the stock options, always look at the order type to make sure you are in the right place. If not, you can end up losing money because of slippage. SLIPPAGE, slippage. That means it'll get you right in the trade, not at the limit, not at the price you wanted to get in at, but shit, at whatever price the stock is at right then and there. Now, a market order is necessary sometimes, but right now I want to show you how to use a limit order. A limit order is you telling them, okay, you want $17.85 per share. And remember, one contract is 100 shares. So that would equal $1,785 to enter into this position. But I just showed you how 100 shares of this would cost you over $3,000. But you get to get it at a discounted premium price because you're trading stock options. All right. Now, it can get a lot cheaper than $1,000 and $785. It can $1,785. It can get a lot cheaper than that, but it can get riskier. This is a safe ass trade for the simple fact that it doesn't expire until January 2028. So broke people, they look at that 1,700 or that 1,800, I'm gonna round it up. They look at 1,800 and get scared and be like, that costs too much, it's too expensive, not knowing that this very contract could print them $10,000. Not knowing that this very contract could give them their first 5-figure trade. Somebody says, why don't you swing trade? I make $50K a week. Who says I don't, Reg Woolsey? Woolsey, you got a Woolsey. You got a Harry Potter name. That sound like one of them Harry Potter names. Okay, so look, nonetheless, I'm letting you know also that you can pick more than one contract. You don't have to just do, no, this is not futures, this is stock options. And someone else asks how much to put in for this to be around 10K. So I would get about 7 or 8 contracts. I would do about, your audio is doubled. Is my audio fucked up again, y'all? I apologize for the technical difficulties. And I appreciate you guys for fighting through it. Okay, now you can get more than one contract. If you were to get 10 contracts, let's see it. Let's see how easy you got. This is easy maths. This is an easy math problem. Let's see who's the first person to get it. If one contract equals 100 shares, how many shares is 10 contracts? I told you it's going to be easy. So now you get to operate 1,000 shares. Now, if one contract equals $1,785, without using your calculator, how much would it cost you to get 10 contracts? Oh, we got some smart motherfuckers in there. We got some smart motherfuckers. I can move on to the next lesson because guess what? That 16, 17 grand, okay, could actually print you your first 6-figure trade, depending on how far this goes in the money. This doesn't expire until 2028. I want to put emphasis on this is not financial advice. For the record, let the record show, even though your boy is also taking courses and classes right now to be a FINRA licensed financial advisor. So I'm quite qualified to talk about this shit, but I'm not giving you financial advice. Somebody says, please explain about 100 contracts. So listen, one contract equals 100 shares. If you was to buy 100 shares of a stock that costs $37, how much would it cost you? 37 times 100, because you're getting each piece for $37. Not when you're trading stock options. When you trading stock options, you get to get 100 shares for a premium price. I'll go on before I talk about puts. Hold on, I got you. So now you want to change, you want to hit where it says order type. You want to click there and you want to change that to a group order, to a bracket order. The bracket order. I'm sorry for all the, let me move this out the way. Hold on. There we go. All right. So I had to circle everything so you can know. Just pay attention to everything I got circled on this so you can know what you're looking at when you get back on your phone and you get to doing this during trading hours. If you're using Webull, Robinhood, Fidelity, none of those brokerages matter. This is all the same terminology. You learn the terminology, you can trade on anything. Also, if you learn how to read a stock chart, a candlestick chart, you can read a Forex chart, a futures chart. You can take this information and trade anything. This applies for futures as well as it does stock options. Now, order type. Notice it says limit plus take profit plus stop loss. That's what LMT plus TP/SL stands for. Limit order plus a take profit order and a stop loss order all in one. Someone asked me earlier, is there any way to minimize the risk? He says someone told him about unlimited losses and unlimited gains. And he wants to know how can he minimize his risk and maximize his gains. Great question. Phenomenal question. So here I have the limit price. I can say, okay, you guys want 1,785. Well, what if I get into this trade and then it immediately goes the wrong direction and I lose $85 right away? That wouldn't be good. I can anticipate that and say, well, this is a call. What if the price comes down a bit, like 5 to 10% before it goes all the way up? So I can change my limit price and say, just let me get in I want to enter into this trade if the price comes down to where I can buy this contract for just a flat 1,700. Let's take the 85 off and keep that in my pocket. And I only want to pay 1,700 for this contract. Hell, you can put 15 right there and only pay $1,500. And that's only if the price comes down to a certain level for your order to get hit. Now, you can get 1 contract, 2 contract, 10 contracts, depending on how much buying power you got. If I only got $10,000, then I don't want to take trades like this because I'm using about 10% of my buying power, which is not a lot, but it's still more than what you should be using if that's all you got. Using math, you will never go wrong. A lot of people feel like, oh, because I got 10K, 5K, 1K, even if you have $1,000 in your investment account, you should not be taking $200-$300 trades. You only get 4 $250 trades and $1,000. You only get 2 of those in a $500 account. And if you only got $250 in your investment account or in your trading account for buying power, you can barely take fucking trades on stock options. I mean, there are some that cost $20, $30, $40. I'm not going to lie to you. Yeah, but the bigger the risk, the bigger the reward. The ones that are cheap are literally the ones that are less likely to happen for the most part. Somebody says, if we can't even figure this part out, how am I going to figure out the T word part? What T word? Time and force? What are you talking about? Just let me finish, Chris. I got you. Whatever because I don't know what you mean by we, Chris. I think there's a lot of people in the chat that don't speak French. You got to let me know if it's you. Let me know if it's you. If you guys, if everybody in here right now don't understand, let me know. If you do understand, show me with a W. If you don't understand, put a L. I need to make sure that I'm not just babbling. They just withhold now? What you mean? What you mean, Chris? Look in the chat and see if you see more W's than L's. This is options. Yes, this is options. He says W and L. Okay. Remember, I was just telling you about the limit price. I want you to understand the limit price for a reason. You can pick how much you pay for the option. You don't have to. If you use a market order, you're going to pay for higher. You're going to get in at the best price. At whatever price, that you can get in at for that moment. But you use a limit order, you control how much you're getting in for. Time in force means good till canceled. That just means, hey, look, this order, I'm putting it in and it's going to be good until I cancel it. They give you about, I think, 90 days. Don't quote me, but it'll sit there for over a month until it gets filled, until you cancel it. The other option is good till the end of the day, meaning that if this order don't get filled today, then I don't want to hold it. You can cancel it. You have that option. Take profit order and the stop loss order. This is the most important part. If y'all don't get nothing else, just make sure you get this part. Please. Take profit order is the price that you want to get out of the trade to take profit. Self-explanatory again. Stop loss is the price that you are trying to get out of the trade if you are losing money. You're going to say, I'm willing to lose this much money on the stop loss. And on the take profit, see, right now, the take profit is at $18.75. You paid $17.85 for this contract. So if it goes up to $18.75, you only made $90. Remember, this is times 100. So it'll be $1,875 worth of profit by the time you get out if you put that. And you paid $1,785 for the contract. You saying that if the price comes down to $1,695, that when I say the price, we're talking about the contract value. We're not talking about the actual stock price. See, your contract value is going to go up or down based on the stock price going up or down. You don't need, this is not futures, prodigal son. You can trade QQQ. You don't need margin to trade QQQ. You don't need margin to trade the technology ETF. I'm reading about contracts. Which site is this? This is Robinhood. If I sell an in the money option, do they withhold for taxes? See, when you're dealing with taxes, Chris, you want to look up and do some research on capital gains tax. And then you want to learn how to offset the wins with the losses. This is what this contract would look like if I was to go ahead and enter into this. This is a bracket order. This is 3 orders put into one. As soon as the primary order is fully executed, which is me trying to buy one contract of Sedge that expires January 21st, 2028, right? That's me paying $1,785 for it. That is the primary order. Once that gets executed, the stop loss and the take profit order are going to automatically be placed. When any one of them gets filled, the other one gets canceled. So I'm going to make that simple. You enter the trade. You automatically have a level set to get you out the trade if it go the wrong direction. You automatically got an order set to take you out the trade if it goes the right direction. A lot of people struggle with making sure that they put the stop loss at the right level. So what happens is they end up getting stopped out. Look, hey, listen, I know it happened to the best of us. And yes, I will explain the Greeks. That's coming up, Talon. But yeah, a lot of us get stopped out because we don't understand the concept of a stop loss, and it is a safety net. And some of us don't have a risk tolerance. Like we can't stomach a loss. Sometimes you got to lose before you win, ladies and gentlemen. Sometimes you have to lose before you win. So That is a bracket order. A lot of us trade without a stop loss, so we experience big losses. Here at Ironworth Trading, Ironworth traders know that you can only have 4 outcomes in the trade if you do it right. That's a big win, a small win, or a break even, which is where you don't win or lose no money, or a small loss. Experiencing a large loss is not an option. There is a surefire way for you to make sure of this, is by you using stop losses and by you taking profit and not being fucking greedy, getting caught with your hand in the cookie jar, or being fearful, taking profit super early and shit because you scared you're gonna lose money. Like, you, soon as you see you up, you like, damn, I'm up $300, but I'm scared I'm gonna lose it. Hell no, you can't be like that. Somebody says, thoughts on investing $200 a week into QQQ as a 17-year-old? That's true. You want me to give you my thoughts on that? You should inbox me. And my thoughts are, you really should open an investment account and reach out to me. I'll hook you up with my advisor. All right, reach out to me. I got a great advisor. That's my mentor who's training me. I'm getting my financial advisor license. I'm qualified to tell you about this shit right now, but I'm not licensed yet. Heavy on the yet part. Heavy on the yet part. But yeah, I can show you how to grow that money, young brother. That's what you want to do. You're doing the right thing by starting out at the age that you at right now. You're really at the perfect age to do it. But I want to let everybody else know too, it's definitely not too late for you if you at a certain age. I'm gonna show you real quick. If you invest $40 a week, all right, if you invested, this is not financial advice. If you invest $40 every week into an ETF that mirrors the S&P 500, which has averaged a yearly return of 10% since 1962. 1 year later, you'll have 2 bands, about 2,100. 5 years later, that would have turned into 13. 10 years later, that would have turned into 34. 30 years later, you got over $250,000. 50 years later, you'll have over 2 million. That's right, Stinky Pinky. We're gonna talk about that too, Stinky Pinky. Y'all be having some of the craziest names, but yeah, we will talk about the rule of 72 as well. Sorry for the blurriness, but we're gonna talk about how to get rich by playing it safe. Somebody says, can you place a $5 trade just to see how it's done? Marco, no. What you can do is paper trade just to see how it's done. And Prodigal Son, you always play it safe. You can trade dangerous on the side once you have a safe ass game plan. Ooh, that was a cold one, y'all. Think about it. Once you safe, you can be dangerous. I have 50,000 in Robinhood. Do I take options or long stock options? Talon, make it make sense. Make it make sense, Talon. All right. Have you pressed follow and you inbox me outside of the live stream? You don't bullshit about it. We don't play about it. This is not financial advice. These questions got me cracking up, Prodigal Son. But guess what? No question is a bad question. He asked one of the best questions in the live tonight. Why you bullshitting? All right, so look, let me move financial advice out the way real quick, because this is not financial advice. I want y'all to keep that in mind, but I want you to learn this is financial literacy, though. The 50, in case for those who can't see what I got up on here, this is the 50-30-20 rule. Your income should be based on your needs, your wants, and your goals, right? Your needs get 50% of your income. I shouldn't have to say that. But it's okay because they don't teach us this shit in school. They don't teach us this shit in school. And a lot of time our parents don't even know it, so they don't teach us this either. When you get your money, when you get your income, whatever money you got coming in, it should be allocated and split up. 50% going towards what you need. I wouldn't even say 30% of your income should go towards what you want. That's a little excessive. And 20% towards your goals. I would rather my goals get accomplished first. Then I can get what I want on the back end. Number 2, the 4% rule says you can take out 4% of your savings each year during retirement without running out of money. Total money, you got $1 million. All right. If you $1 million times 0.04, that's 40 grand. 40 grand divided by 12 months, that's $3,000. That means you can spend up to $3,000 per month in retirement if you do this shit right. By the time you retire, that'll be your budget. You can go in, you can do whatever. You can go sit up on the lake, on a beach somewhere, woo-wop the bam, all right? Number 3, 3 times minus 6 times. Fund rule, save 3 to 6 months. And that's not minus either. That's 3 times to 6 times funds rule, face side. All right, so only use this fund for emergencies, right? You can save 3 to 6 months worth of living expenses in an emergency fund. That's your rainy day. That's a rainy day account. We supposed to have more than one bank account. You know why? This is not financial advice, y'all. This is financial education. Do you know why? Have you ever ran across a person and they be mad as hell that Disney just took some money out they shit? How you mad the bills is taking the bill money out? It's supposed to be an account specifically for the bills. You separate that shit. You don't give them the same account that you get paid in. Your checkings account, your savings account, and then you should have a whole nother account just for a rainy day. Then you got a whole nother account just to pay the bills with. Then you got a whole nother investment account. Number 4, the 2-time investing rule. For every dollar you splurge, every dollar you spend on a luxury item, invest the same amount. If you buy a $200 pair of Jordans or a $200 pair of heels, invest $200 in your investment account. Think about that. Think about this long and hard, y'all. This is generational wealth building information. Number 5, 3-time rent rule says that rent should not exceed 3 times a person's gross monthly income. The idea is that housing should not consume more than 1/3 of a person's income. So you have money left over for expenses, saving, and investments. That's important. That's an important one. Think about how much you paying to live where you living at, and it should not be 3 times. 3 times a person's gross monthly income is crazy. Your rent should not exceed 3 times a person's gross monthly income. Listen, because that's a heavy one. A lot of us paying too fucking much and don't realize it. Now, number 6, 20-40-10. If you have to take a loan to buy a car, then follow the 24-10 rule. 20% minimum down payment, 4 years, maximum of years that the car should be financed, and then 10% maximum amount of your gross income that should be going towards your car. Most cars depreciate with time. Why y'all want to go buy a new car and shit? Remember, keep that part in mind too, because a lot of y'all count your car as an asset, but an asset is anything that puts money in your pocket. A liability is anything that takes money out of your pocket. Number 7, my favorite one, the rule of 72. Is what led us here. I think Dino brought up the rule of 72. Find out how long it will take your investment to double. Divide 72 by the growth rate of your investment, right? Expressed as a percent, because a lot of us don't know fucking percentages. So whenever something is expressed as a percent, we get confused. How long will it take to double your investment at 10% interest? 72 divided by 10 equals 7 years. So you use these type of strategies, most of them, right? And there's other ones as well, but you use these strategies to make sure that your money is growing. You want your money to grow. You want your money to grow. Compound interest. Look what it say at the bottom. This is what Einstein said. Compound interest is the 8th wonder of the world. He who understands it, or she who understands it, earns it. He who doesn't pays it. Who doesn't pays it. Who understands it earns it. Who doesn't pays it. You gonna end up earning compound interest, or your ass gonna end up paying compound interest. Dino says for options, if it goes well, we lose contract price but gain premium. So the difference is the profit. If it goes well, we lose the contract price but gain premium. You don't lose the contract price. You get both. You get both, and your profit is the difference between how much you paid for it and how much it is worth now. If you paid $100 for the contract, you paid $1 for the contract. I mean, it cost you $1. $1 times 100 shares. You paid $100. If that contract's value went from $1 to $2, you made $100 profit. Dino, I'm not sure I understand what you mean by you say we paid the contract price. That's the premium. You get it? Did that make sense? So like it's telling you about if you invest $40 every week into an ETF that mirrors the S&P. I mean, this is what the S&P did from before 2000. Let's just start from 2015 to now. That's just 10 years ago. 10 years ago. That's not a long time, y'all. Especially you young people. 10 years ago, by on your ass quick. And y'all older people, we don't got much more time left, right? So why are we bullshitting? Why are we playing? Why don't you have an investment account? Why? Make it make sense. Why? Please tell me why. Why? Now, I'll show you one of my favorite stocks right now. Webull. Yes, this is the same brokers that I've been showing y'all all night. All right. I don't earn commission by telling y'all to go to Webull. I actually earn commission by having you make an investment account with Fidelity. I don't get paid by telling y'all to go to Webull. I like Webull. I genuinely like this shit. But you can hit the link in the bio. I got an affiliate link in the bio if y'all want to check it out. But nonetheless, very strong bullish evidence means, so bullish means they predicting the price. They think the price is going up. They are speculating that the price is going to go up. And whenever you hear somebody say bearish, they are speculating that the price is about to go down. All right. So very strong bullish evidence is on Webull. It's at this strong level of resistance. And we break above $15, $16. I don't see 18. I'm looking at $30 as the next target, but we got to break past 18 first. There's analysts on Webull saying the same thing. Strong buy signal from them based on two analysts. For the 1 year price forecast, the average price target is $18.50 with a high estimate of $19 and a low estimate of $18. This company, Robo AI, very strong bullish evidence. Robo AI, y'all probably never heard of this fucking company. Look, let me tell you a little bit about them. Robo AI Incorporated is a United Arab Emirates-based technology company focused on artificial intelligence and robotics. The company develops an AI-driven platform designed to connect smart devices and intelligent mobility solutions. It provides integration of AI-powered terminals such as smart vehicles, autonomous driving systems, robotics, and electric vertical takeoff and landing aircraft. The company also works on a unified AI operating system and a smart contract-enabled ecosystem to support decentralized data exchange and asset tokenization. That's a lot of futuristic shit going on. Futuristic love, are you with it? Hey, girl, I want to Elroy you. Saks Fifth me looking at it. All right, so look, I want to look at, when I look at things like the financials, I'm the ROA, the EPS. I'm like, you know what? Maybe a lot of people don't know what these things are, so I'll share those as well. ROA refers to the ratio of net income to average total assets. We want to know how much they bringing in and how much they got. The return on assets is used to evaluate a company. Let me move this out the way because I can't see. There we go. To evaluate a company's efficiency in utilizing its assets to generate profits. A higher ROA value indicates a more efficient utilization of assets and a higher return on investment. Then you got calculation, and how they showing you how they calculate it. EPS, the basic earnings per share metric, is the ratio of a company's net assets to the outstanding shares of the common stock. This metric reflects the current value of assets each share of stock owns. The higher the net worth per share, the more the shareholder owns the value of the asset per share. This matters to us because we are the shareholders. You buy that stock, you become a shareholder. You want to know how much that shit is really worth. How much value do you really own per share? So we pay attention to the EPS. We pay attention to a lot of the financials. I'm gonna move on though. I don't want to get y'all caught away. I want to go back to what we was talking about as far as buying a call or a put. I'm gonna show you how you can pick a cheaper one. Now remember, I picked the expiration date that was in December. I mean, that was all the way in 2028. Imagine this is what would happen if you bought the expiration date that was 3 days away. That same $40 call that was $1,700 some dollars is now cheap. Did y'all remember why I said it's cheap though? Who remembers why it is cheaper? Who knows why this contract is cheaper than the one that expires in January 2028? Maybe some of y'all wasn't here. I know I lost about 30 people since I talked about it, so I'll just go ahead and give you the answer. It's because the expiration date. Yes, implied volatility, stinky pinky. Yes, it's out of the money, but more so it's cheaper because it is closer to it's closer to today. It's cheaper because the expiration date is close as hell. It's this week, I think. If I pick that expiration date, like this is on Robinhood right here. Check out Robinhood. If you look at this $40 call and it's 75 cents per share. Oh, I thought it was something else. I'm like, oh my God, TikTok, don't start. All right, so if it's 75 cents per share, remember that's times 100 because each contract is 100 shares. So that's really $75. All right. $75 for 100 shares of Sedge. And what's going to happen is I will be able to get more contracts because it's cheaper. I was just about to spend $1,700 on one contract. So that means I will be able to get more shares. Somebody asked me earlier to talk about the Greeks. So that's what I'm about to do now. I hope he's still in here. Whenever you're looking at contracts, there is some information. Like I nerd out with this information because it helps me to determine whether this is a good contract to buy or not. It was you, Talon. I got you. So when you looking at, let's say, the mark price, the last trade, okay, those are the prices that people are paying. The bid and the ask. See, that's a big spread. That's almost a 10-cent spread. The spread is the difference between the bid and the ask. The bid is a person, when you bidding, you trying to buy it for a certain price. And when you asking, you trying to sell it for a certain price. So the bid is the last price that somebody bought that contract for. The ask is the last price that somebody sold that contract for. Whenever you selling something, you trying to get what you asking for it. Whenever you buying something, you trying to bargain and bid on it. Now, previous close is just telling you the previous close for that contract. Previous high is letting you know that this contract value was actually all the way to $2 a contract, which is 200. Now it's 74 cents, which is $75. Chance of profit, because remember it's times 100. That part is what people get confused on when they see the numbers $1.64 or 74 cents. Those are times 100. It's the value of the contract. It's the premium of the contract. It's usually a percentage of how much it would actually cost to buy 100 shares of that stock. Now, I don't want to get too complicated because I like when people tell me like, yo, you made it easy for me to understand. And sometimes I forget that I brought it all the way, I slowed it down to a person's level and then I, speed up, but I'm going to slow down again. Chance of profit is letting you know this is your chance of this call actually being in the profit. 21% is actually not super bad, but it's definitely not good. You want this shit to be at least over 30% chance of profit, just to even the odds. Now the volume, that 182, that's represented in millions. That's really 182 million. That's not. I'm pretty sure it might say 182 M if it was million. I know good and damn well it ain't 182 people. But open interest is telling you how many people is looking at the contract as well. But we're going to talk about the Greeks because that's the part that confuse people. Delta. Delta says 0.30. All right. That 0.30 is letting you know that every time Sedge, that's the name of the stock, every time this goes up $1 or goes down $1, this contract will gain or lose value by 30 cents. And remember, that's times 100, so it's really $30. So if you pay $75 for this contract and the delta is at 0.30, every time the Sedge go up $1, your contract value will go up $30. If you ever traded futures, that delta is equal to a tick, if you ask me, because it determines how much money you make per every time it go up. Only difference is the stock market doesn't move in dollar increments. It moves by the penny. And when you trade in futures, it's not that way. Futures move 25 cents at a time sometimes, depending on what commodity you trade. And every time it moves 25 cents, you make $12.25. Every time it moves $1 in futures, you made $50. Now, I'm getting offhand talking about futures. I don't want to confuse y'all. Pardon the body. Delta is 30 cents. So that means it's $30 every time the contract moves up or down. The gamma is 0.08. That is telling you how much the delta will grow. So every time the price goes up or down, the delta, the contract value will change by the delta. The delta will change by the gamma. The gamma literally will change the delta, and it will go up 8 cents. Every time the dollar, so that delta can end up going as high as 1. It could be 1. You can literally make $100 every time the price goes up or down $1. If the delta is all the way at like 99 or $1, that's just like owning 100 shares at that point. You might as well actually own 100 shares once it's that high. But I wouldn't buy a contract with the delta already that high. It could go in the wrong direction for you with the high delta too. You can lose that much money too. Your contract value can lose $30 every time it go in the wrong direction. So keep that in mind. And then the theta, this is how much your contract will lose every day that it is not in the money, that it is open. So as long as you got this motherfucker open and it's not in the money, I mean, that theta right there, people don't pay too much attention to it, but I call it the price of doing business. It's the price of doing business. The contract gonna lose 18 cents every day, especially when it's not moving towards being in the money. Now, I want to show you something real quick. If I was to get this $40 call that expired in 3 days, let's pretend that the price actually went to $60. How much money would I make? Here, I could have bought 20 contracts since it's $75 a share. Since it's $75 per contract, okay? If I bought 20 contracts, that would be $1,500. So $18, what you mean about $18? Oh, because of the, the theta is not like the gamma or the delta. The theta is not like the gamma or the delta. It is going to be per share, but you do lose money as long as it is open. That theta can change. It won't be negative 18. The gamma won't be the same. The delta won't be the same. They all change. And they change based on the contract's value. You will see. But yeah, somebody else just put it right there. Theta equals time decay. So it's just the theta is going to put it this way. Your contract going to expire. The closer you get to expiration date, the less valuable that contract is. Now, you spent $1,500. You was going to spend $1,700 on that last contract that expired in 2028. So let's say you still got that same budget. You put $1,500 on this trade. By the time Sedge gets to $42, you already up $2,900. That's not including the $1,500. I want to give you an even better, even riskier trade. The bigger the risk, the bigger the reward. Hear me out. This is not something I would take, though. This is just me showing you how if you buy deep out of the money contracts, it's risky as fuck. You can lose a lot of money. But if you're right about the price going in that direction, I'm finna show you something magical. What up, trends to you? Let's say I picked that $44 call since it's 17 cent since it's $17 for one contract. At that cheap ass price, I can get a shit ton of contracts. It's only $17 for one. I was just about to spend $1,700 on one contract. If I get this one, I can get a lot of them. This is Sedge. Look what happens. Now, I buy 50 contracts for Sedge to go to $44 by this Friday. If Sedge goes up $15, $20 by Friday for whatever reason, 47. Let's say it goes from 37 to 47. That's just a $10 move. If Sedge goes up $10 by this Friday and I have 50 contracts, that's 16 grand. That's because it is deep out of the money. That's because the expiration date is close as fuck. It's risky as hell. They don't think it's going to happen. But if you're right, it pays your weight in gold to be right. Most of the time, 90% of the time, these expire worthless because people are gamblers and they don't take the safer trade. I showed y'all 4 different trades tonight. The one that was the most expensive, the farthest out, was the safest. The one that's showing you that you can make 16,000 is the sexiest one, though. The one that is the most dangerous. Out of the money is sexy as hell. In the money is safe as hell. Out of the money is sexy as hell. Out of the money look like, listen, don't get me started. Misbeat the odds. You beat the odds and remain humble. So yeah, just know that. Do y'all got any questions? A contract, yes, 100 shares. You trade in stock options. A contract is an agreement between a buyer and a seller. Constance, what up? Do y'all got any questions? And if you are new here, if you learned anything tonight, hit the follow button. If I'm giving out all this information for free, just imagine what I give out once you become a supporter. Build a relationship with you. I'm looking for long-term clients. But if selling options for out of the money and options expire worthless, that it didn't hit the strike price. So you can sell the contract before the expiration date. You can sell the contract before it even gets to the strike price. The moment that the strike price is going towards, the moment that the share price is going towards your strike price, you begin to make money. You start to see profit immediately. As soon as the price started to go, you don't have to even wait for it to get to the strike price. I could have sold this contract at $40 and just walked away with 4,000, 5,000. You don't have, just keep in mind, you don't have to hold it. The closer it gets to expiration, you can let it expire if it's in the money, Dino. You can also be assigned shares. Remember that. That's right. You can exercise that contract. Once it's in the money, you can buy those shares for the cheaper price and have that money as if you actually had those shares. You can go ahead and say, come up off that. Come up off of it. I'm talking about in there. I'm talking about in it. I'm talking about all the way in it. Wham, whammy. Any questions? Come on, y'all better give me while y'all got me. It's 3 a.m. I already got to get up early. The market opens at 9:30. I like to get up at 7:30 so I can see what's moving. Any questions before I get up out of here? Also, I am hiring. I'm looking for people that's looking to make 6 to 7 figures a year. You can hit your work ethic gonna do that though. If not, if you're not, you ain't gonna make that. The minimum amount you can make is $1,000 a week over here though. Can you go live at 7:30? You want me to go live at 7:30, Mary? I will. Yes, I will. You need to join the community. It won't be on here. It'll be in the community. I don't even want to say the word because they be acting crazy. Please join, Mary. You will enjoy it. You will enjoy it. But yeah, if y'all interested in it, yes, that's the word. It's right in the link is in my bio too. The link is in my bio. I do a lot more than go live in there. I can say more and do more. There is a free section in there, Tim. There is a free section. And I want to toot my own horn and say that the people in the free section that understand the power of execution, they end up making enough to buy the premium. In the premium, they eating good. In the free section, they eating good too. Don't get it twisted. I look out for everybody over there because I overstand and understand. But I know people charging an arm and a leg. My server cost only helps me keep the robots running. We have indicators that we have built that give us buy and sell signals. We're not bullshitting. Stinky Pinky, I think it's $25 a month. What are you hiring for? Where do we apply? You inbox me, you reach out, and what we are doing is helping people with they build generational wealth, literally giving them plans to free up money so that they can invest money. You got to just know how to talk on the phone. You got to be a high-spirited, high-energy person, ambitious. If you want to work from home, you want an opportunity, you can be a licensed financial advisor at the end of it. Shit, that ain't bad. $25, I'll shoot that right now. Yeah, go ahead and join, Tim. You hit the link in the bio. After your first week in there, matter of fact, it's a free trial. There is a 7-day free trial. Take advantage. I come on, somebody else asked me a question. Constance, you asked me what time do I sleep? I don't sleep. I've been getting a lot of backlash from my loved ones and my clients. They like, bro, do you ever sleep? I don't. The link is in the bio. So I'll go ahead and I'll end the live because I'm not getting any more questions. Let me see, make sure I ain't forget nothing. Because I had a long show, and what happens is I get caught up, and then I end the show and realize I missed half of the shit I was going to talk about. I didn't even get to talk about. Which one should I choose? The Discord? Yeah. I mean, premium, if you ask me. Why would I tell you not to get premium? Of course you should get the premium. If that's what you're asking me. How long do you think it would take to earn good money? Well, that depends on how much you're willing to study, how much you're willing to practice. You know what I'm saying? Do you know that Michael Jordan, Mike Tyson, Michael Jackson, none of these people just, they practice. You got to practice. You got to study. And if you're doing it on your own, you will lose money. It will cost you time. You're going to lose some money. It's possible to do this shit on your own, bro. No, Yang. No. I do not think it is going to go up to that price. That said, by October the 3rd, what I was showing y'all, that was for educational purposes only. Do not buy the October 3rd expiration date. That was for educational purposes only. This is not financial advice. Me personally, I'm already in the trade. I got in at $20 and I got an $80 target. I'm going to get out when the price gets up to $70 to $80, and I have an expiration date that expires in the future, 2028. Now, if you're going to get in the trade and buy yourself time like that, yeah, you early. I told you I got an $80 target on it. Webull, I got a $70 target on Webull as well, too. And Webull is at $15 a share right now. BBAI is another one of them stocks that I'm looking at that's I feel like it's like buying Palantir at $5, $6, $7. It's cheap still. What was I saying, though? I got carried away. Thank you for this info. I'm understanding more and more. That's what the fuck I like to hear. That's what I like to hear. That's what I do it for. Literally, for those type of comments just like that. Over $1,000, Tim, but it's gonna print. And the Webull position that I'm in already is already up over 50%. And let me see if I got it. Let me see if I got it. It's already up over 50%. And if you look at the expiration date, it does not expire until 2027. I like leaps. Okay. I like leaps. I like having time. I can chill. And it's up over 50% too. Yeah, bro, I'm loving this shit right here. Make it make sense, Gordon. What about XRP? Just came in. XRP is not a get rich quick thing, Tabitha. Every time it dip, I hope you buying it with chips. Leaps are excellent choice. Yes, they are, Stinky Pinky, especially when you buying in the money, but this is out of the money. This is far out of the money, and I'm going to tell you why. This stock, this company is undervalued. Freedom, great question. Yes, you asked a great question. Not only that, Freedom, I sell it. Because why the fuck do you have a car insurance? Why the fuck you got a car insurance but not life insurance? Y'all tell me what type of person got insurance on their car but not on their life? How many people y'all know they got kids but they don't got a will? How many of y'all own a business but it's not in a trust? Okay, Tim, it's in my page. It's in my, you gonna see it. It's the link in my bio. Just as soon as I end the live, you already followed me, then you can easily go to my page and see it. All right, but yeah, I don't know about that State Farm shit, bro. Talking about some State Farm. No, we ain't talking about State Farm insurance, life insurance. But you say it's gas, it's to each his own, but I know better. Let's just say I know better. They turning their life insurance into a bank. I'm not going to talk about too much in this live stream. If you are serious about generational wealth building, please reach out to me. This is your sign. This is your final sign from me, at least, because I ain't going to say it too much more because I'm not a salesperson. Literally, I'm a financial coach, not a salesperson. But yeah, reach out to me, inbox me, hit the follow button so you don't miss another live stream, because we do this all the time. And it's a community. I don't see none of us being fucking poor or broke. Not anytime in the fucking future, especially because of the shit that we are doing now, the seeds that we are planting now, not to mention, ladies, I hope y'all know that y'all gonna control over 70% of the wealth in the future. So I really need y'all to understand this shit. Y'all are my main ones. The women, I really want to teach y'all that's uplifting fallen humanity. I had a mother tell me the other day that she taught her sons what I taught her in my live. She taught her 12-year-old and her 11-year-old what the difference between assets and liabilities. I cried. You know why I cried? Because if my mom had taught me that when I was 11 or 12, not to knock my mom, she did the best she could. She didn't know. But if I had that information at an early age, oh yeah, I could have changed. It would have changed my life. So just seeing that makes me feel as if I'm changing lives. This is what I want to do for the rest of my life, is bring financial literacy to us. I'm gonna say that. I'm gonna bring it to us. And not ghetto financial literacy. I'm actually taking the course to get licensed by FINRA as we speak. What is that at the background? The P&L? P&L stands for profit and loss. So it's either going to show you how much you making or how much you losing. And this is a call, meaning I am predicting that Webull stock price is going to go up. What is today? Today's the 30th. So today's a new day, you guys. We're going to make today twice as good as yesterday, half as good as tomorrow. I appreciate you for being here, and I would appreciate a follow. Okay, hit the follow button so y'all can see me again tomorrow. If you are interested in the position, the work from home position, all right, and you want to be a part of the team that I'm building, please reach out to me, but only serious inquiries only. I only want serious people that's go-getters. I don't want you to do it and you're not serious. You a quitter, don't come, don't do it. Don't do it. Don't even reach out. You don't want, I'm building a team though. I'll have my own brokerage one day and you can be a part of it. Hey, bro, how you feel about Nebius? I like that stock, but I think that they can come down another 5. Nah, I ain't going to say 5. I think they can come down another 10%. What time you hopping on the live? Every night, 11 o'clock, 12 o'clock, I get on live every night. Every night I'm on in this. I'm usually on anytime from 11 o'clock to about 4 a.m. in the morning. It could be random. I'm sorry. But if you join the community, I'm in and out of it all day long. I'm in and out of it all day long. And even more, if I'm your mentor, you get my personal phone number and access to me, and you can pick my brain as much as you want. Yes, the work at home job, inbox me for that 600 day trader, no options trader, inbox me. Are you looking for help or looking to teach? Both of them, Jessica. Both. What time it starts, brother? Oh, just reach out to me. It starts when you are ready. When you are ready. All right. So I'm about to end the live so you guys can go ahead and hit the link in the bio, or so you can inbox me if you need to. And I'll catch you guys later on today if you are reaching out to me. Everybody else, if you haven't hit the follow button, it's right there in front of you. Stop treating it like it's garlic and you a fucking vampire. Hit the follow button. All right. Especially if you learned something tonight. Thank you for sending me the heart me. I appreciate it. Good looking out. You locked in a fan club now. You Blossom, you just got in, but guess what? If you just coming in and y'all catching the ass end of the live, I promise you it's worth subscribing to me, hitting the link in the bio so that you can catch the replay. I posted on FB and I posted on YT. I posted on the tubes of you and I posted on the book with your face on it, if you know what I'm talking about. Can I borrow that @ symbol? What just said on my live at golf? Yes, you can, of course. Yes. What stock symbol showing for this option? This is the Webull stock. WEBULL. Also, motherfucker, $15 a share. If you're going to get in Webull, try to get in at 13. This is not financial advice. It could dip back down to $13, $12. That is a great price to buy in at. If not, this stock is already taking the fuck off and will be on its way to $18 next, then $30. Yeah, so I dollar cost average. If somebody tell me, hey, this stock finna go crazy, I don't just wake up the next day and buy a bunch of that shit. No, I'll get like 5 pieces here. I'll see if it's going to drop down and give me a cheaper price. I'll do 5 pieces there, 5 pieces there, 10 pieces here, especially when it dips. That's dollar cost averaging. If you can afford 10 pieces at a time, be my guest. But yeah, I'm saying I like to do 5. 5 is my number. I like 5 pieces here, 5 pieces there. You can pick your own number, whatever fits your boat. It actually should vary based on the price of the stock. See, let me tell you something about buying contracts and your stop loss and all this extra shit. That shit should be based on the probability of the trade happening. The higher the probability of the trade happening, the more contracts I'm finna buy. The more likely this shit gonna happen, the more contracts I'm finna buy. The less likely this shit finna happen, I'm gonna get 1 contract. Because you don't really know what's gonna happen. The more I think it's gonna happen, I'll risk a little more. The less I think it's gonna happen, I'm not risking a lot of money on that shit. I don't really think it's gonna happen. Sometimes common sense is not so common at all. But sometimes common sense ain't got shit to do with it, and you need a mentor. And it ain't you. You need somebody right there with you. I'm going to tell you why. Psychological is what trading is about. It's not about technical. It's not about technical analysis. This shit is psychological. I'm going to give you an example. You want to lose weight. You hire a personal trainer. You hire a personal trainer to help you lose weight. After 2 weeks, you lose 20 pounds. They are a very good personal trainer. You looking at your abs and shit. Now you got a little 6-pack. You feel like you don't need this nigga. You feel like you don't need him no more, right? 2 weeks later, you done fucked around and got the gut back because the personal trainer showed you how to do it and showed you how to maintain it. Showed you how to keep it going. Yeah, he showed you how to properly do a sit-up, and you got a 6-pack from it. But you have to learn discipline now. You have to learn discipline and how to keep doing it. Consistency, psychological things. Also, that same mentor should not catch you eating a rack of ribs. If I catch you eating a rack of ribs, I'm going to smack this shit out your hand. That's just the type of personal trainer that I am. So, rich girl vibes. I'm not going to play if I was your mentor. I'm going to hold you accountable. I'm going to make sure that you actually seeing a return on your investments, because that's what I care about the most. I don't care about your feelings. I care about your return on investment. So if you do something that don't make sense, I'm going to tell you that don't make no damn sense, whether you like it or not. It's accountability. It works. So if you are interested, please reach out. I'll reach out to you since you said it. All right. So I need everybody that's interested to put mentor in the chat if you are interested in having a mentor, and I will reach out to you. If you're interested in the job position, go ahead and put job, and I'm going to reach out to you as well. I see every comment. Okay. And then everybody else, if you learn something, just put good night for me. Just say good night for me if you learned something tonight. And all my new people, hit the follow button, and you can catch the replay on YouTube and on Facebook and the link in my bio right here on TikTok. I appreciate everyone for joining the show. I hope you guys remember to make today twice as good as yesterday and half as good as tomorrow. All right, y'all enjoy the rest of tonight.